We are looking closely at the IT sector today, and to discuss the outlook for the industry, we've got Mr. Rausto Ravanan, who's CFO at Mindtree, joining us on the phone line from Chennai. We've also got Bhavin Shah, who's CEO of Equirus Securities, who's joining us on the show from Ahmedabad. Bhavin, I'll come to you in just a moment, but Rausto, to begin with you, you had mentioned some time back that discretionary spending by clients is going to somewhere come under pressure. Do you see that? Would you say that concern still remains, or would you say that things have begun to look a little better in recent weeks?
Sure. Like we mentioned before, what we are hearing from our customers is that most of them would get their budgets approved as of now, i.e., and most of them would also probably have a small to marginal growth in their budget. But some of the discretionary projects may probably be back-ended. They may not start in January or February, but they may start in April or May. That's what we are hearing from some of our customers. Their own businesses are doing well, but they are concerned about the environment, and therefore there could be some delays in starting discretionary projects.
Sure, and just to keep it with you, Mr. Ravanan, if you could just tell us what the impact is with the way the rupee has been moving and how that has really been playing out on your financials.
Sure. For us, we are an export-oriented company. Approximately 94 or 95% of our revenues come from international markets. And to that extent, a depreciating rupee benefits profits and appreciating rupee hurts profits. For us, it doesn't matter what the level is. The rupee can be at 45, the rupee can be at 50. Both are equally okay for us as long as it reaches some level and stays stable there. From a management perspective, trying to manage its volatility is the place it comes from. In quarter 3, we had an approximately 4% gain to operational profits because of the rupee depreciation. So far, the rupee has been quite volatile from January. Let's see what the impact for this quarter turns out to be.
Right, and Bhavin, if I could just bring it to you, we did see some sort of a rally in IT stocks over the last 3 weeks. Despite the fact that the outlook, at least for the fourth quarter, continues to remain a little bleak, and of course you also have the fact that the currency is actually gained. Would you say that the run-up was, maybe a little unwarranted, and that maybe we could see some sort of a correction going forward?
I guess, one could imagine a couple of factors might have contributed. Obviously Indian markets have generally done well, and we have seen a little bit of a positive indications from U.S. economy in terms of the data points coming out of that economy. So I think those two factors might have contributed. However, for us, irrespective of how strong or weak the U.S. economy is going to be, the key is that we believe that the offshore volume growth as a a function of IT spending growth, that multiplier is shrinking, has shrunk quite a bit. And IT spending growth, irrespective of the corporate profit growth, has been somewhat muted. Even last year, I've been talking about calendar year 2011, 2010 was a bumper year of profit growth for US companies, but the IT spending growth was not so strong. And I think the same picture this year. I think last year again the profit growth for US companies was very good, and yet we're talking about relatively modest growth in IT spending, if at all. And so I think that what it is telling us that there is a general level of maturity that industry is reaching, and as a result, we believe that the Indian IT industry will continue to do well and continue to grow, but at a lower rate, and that needs to be adjusted in people's equations. And from that standpoint, we do believe that the recent rally may be somewhat premature, and we won't rule out a correction later on.
Bhavin, you just had Mr. Ravanan saying that the volatility in the rupee would have to be one of the big concerns playing out on the company. How much of a concern do you believe this will be in the coming quarters, and do you foresee Q4 being less or more bleak than the previous one?
Obviously, we saw most of the companies benefit in the December quarter, and this time around, I think generally the industry has done a good job in terms of managing the currency, and I think most of the companies saw relatively quick benefits of the fall in rupee we saw. And obviously some of that advantage will reverse this quarter, but I do think that it's not really a kind of a spoiler one way or the other per se. I think the real issue is the volume growth that we need to see.
Right, and Rosto, just bringing it back to you, what's the outlook for the BFSI segment? Do you expect that orders from that segment are going to hold up, or do you believe due to the challenges that sector faces in OECD markets, we might see some sort of a slowdown on that front?
Sure. BFSI is not a very big segment for us. It's probably only less than 20% of our overall revenues. Manufacturing, travel, etc., relatively sort of bigger exposure for us. So we probably don't have that much of data compared to some of the other players in the industry for whom BFSI is bigger. From our own clients, we are seeing the same trend that we are seeing in our BFSI clients that we are seeing from other clients. Broadly, that their revenue growth, their profits, their business is reasonably stable. However, everybody is concerned about the overall environment, and to that extent, they'll factor that macro uncertainty when devising their own technology plans.
Bhavin, with respect to what the outlook is for FY13, you had Cognizant, which recently guided for a 23% growth in 2012. NASSCOM expects an 11 to 14% growth in FY13. What are you penning down for Tier 1 companies? Are you expecting the growth to be back-ended?
So I think certainly there is going to be, if there is any upside to the growth, as Rosto just recently said, it'll probably be more back-ended. We are basically looking at in the range of 12 to 15% volume growth for the Indian IT companies. So if any company does better than that, it will definitely be a positive surprise. But I think roughly that's what we are assuming for now.
Right, and Rosto, just coming back to you, the volatility that we saw in the rupee in November, December last year has gone away. But there still seems no clear view in terms of where the rupee is going to head this year. It's expected to bounce around a little over the course of calendar year 2012. So in that regard, how are you planning to deal with the currency?
Sure. Our policy has been the same since April 2008. We forecast our net exposure, i.e. our revenue minus collections, on a rolling 12-month basis and hedge 50% of our net exposure. So we are sticking to that policy. We believe it's a middle-of-the-road approach that is balanced between giving some upsides for us if the rupee depreciates and protecting downsides for us if the rupee appreciates. So to that extent, it's one of the most conservative policies that we can think of in this heavily volatile environment.
Okay, Mr. Ravanan, we'll leave it at that. Appreciate you taking out the time and joining in on this discussion on the sector outlook for the IT space. But Bhavin, before we let you go, wanted to get in your top picks from the IT space.
We continue to like eClerx, which is one of the smaller companies in the sector, but we feel that they have consistently delivered strong growth at a very healthy margins and return on capital, and most importantly, they have a close to 50% dividend payout ratio. So they are distributing cash back to shareholders, and we see a good upside on that stock. So at this point, that's the one that we feel has a good upside in the sector.